to the Trading Market Technicals morning call video for Monday, December the 10th. Hope everybody had a great weekend. Back to the markets. Markets last week ended on a choppy price action, consolidating week. Very little pullback, which I was looking for a little bit more of a pullback. We did not get. So that is value actually looking quite bullish at the time. But I think the markets are at an inflection point at this time, and we are consolidating, which is bullish. And but the markets have failed to break above the 1424, 1430 area. And I think that the longer it stays below it, the less of a chance it's going to break out of it. And we're going to need to see the markets prove itself that our next move is going to be up. Now, I do think that there is risk to the upside. However, with the market consolidating, not really moving anywhere last week, there is a risk that we could get a break to the downside. And that's something that's why I tell lots of traders and investors that if you are an investor, you may want to, buy puts or protect your portfolio. And if you're not, if you're just swing trading, I would tighten stops or not put any new risk on, only because at this time we are starting to enter a seasonal strength of the market, which we should have really started seeing last week. We did not. So things could change, and with this fiscal cliff looming at the end of the year, and nothing has really gotten resolved, markets could take a healthy hit here. However, time will tell, and we're just going to continue to act and react to good price action and good trade setups. And the markets are going to basically tell you, as an individual trader or investor, how active you're going to be. And right now, markets consolidating. There's no reason to be overly active here. So as you can see, take a look at our number board here. Dow Jones, very, very small gain on Friday. For the week, we posted less than 1%. S&P 0.13, NASDAQ down because of Apple, NDX 1.39 as well. Russell, very, very small gain, and then some of the sectors below. Commodities took a little bit of a hit. We had the dollar gain a little bit of strength here. Looks like the dollar's actually trying to weaken a little bit, so we'll see what happens. Maybe that'll put a bit into equities. Gold, silver, the gold miners, as you can see here, all red. Copper, 0.63%. That wasn't too bad for the bulls. And then some of our other leading sectors here, if you could see, transport's up nicely, semiconductors up nice, retail was down a little bit, banks up a little bit, financials as well, brokers, home builders took a hit, down 2.67%, and bios down, healthcare up 0.6%. So a little bit of a mixed bag, but a lot of the sectors that we follow are holding in just underneath that 50-day moving average, and I'll go through that in a moment. What I'm looking and what I've been doing this weekend with many, many charts, over 1,000 charts I've looked at over the weekend, the problem what I'm seeing is our indicators aren't telling us much other than the fact that everything is still status quo for an upside surprise. But when you dial down into the bigger stocks and the bigger sectors, I look at Apple. Big warning sign, Apple couldn't rally. Apple's starting to roll over. And I do see if Apple takes out that low of 505, you'll see a 470 flush in a heartbeat. Once it breaks that psychological 500 barrier, all bets are off to the upside. You're going to see a 475 flush. And if we're lucky, Apple will stay at 475 and start to really recuperate a lot of its losses. Only time will tell. And I hope I'm wrong. And then I see Freeport-McMoRan, major copper supplier, down. That's not a good sign, especially when you have a big producer like FCX, which seasonal strength right now should be upon us, upon the stock, we don't have that. Then we have Bank of America up, we have Citibank up, which is a good thing. But then we also have the consumer staples, XLP, and the XLV, which is healthcare, up as well. And that's something that scares me, that says, and then also we have the Dow doing quite well, which is a brick and mortar Dow 30 stocks, which is really not risk related, and that's kind of scaring me a little bit. But we'll go into the charts. I'm going to show you some of what we see. I'm going to show you some of the sectors, and we'll look at some of the performance. But that's a big warning sign, and I think that the markets are either, and it really doesn't do much for us, but it looks like the market's either going to pop one more time, try to take out the highs, and more likely fail, and then sell off, and or will sell off first and then rally into the end of the year. And that's what I would love to see. We haven't seen that yet, But let's go take a look at the charts. Let's go run into the indices first, just to show you brief. I like to show you this bar chart here. Oil, big down day, breaking down from a bear flag. I think oil has one more low, and then it'll probably make some sort of positive divergence and start to rally, at least for a dead cat bounce. Gold down a little bit, but holding up well, guys, and that's something that I'm not giving up on a gold trade yet. I do like gold, and I'm waiting to see some sort of further evidence that gold may have bottomed, at least for a tradable bottom, and then we'll go from there. Dollar up nicely. Look at the Russell, very small, and that's a good gauge of risk. And Russell really has just kind of stuck in the mud here. S&P mid cap, S&P, and then of course the Nasdaq down big, and then the Dow Jones Industrials up. So this is not. I don't want to see this. I want to see the Russell up 1%, 2%, really leading these other sectors, and that's not happening. Take a look at this, the sector performance, financials up, which is nice to see. Healthcare-based materials, that's also good as well. Good gauge of risk as well. Technology down again because of Apple. Now, let's look at some of our indicators. The bullish percent almost went on a sell signal here, as you can see. But it has not quite. So we'll see. If we get a down day today, this will probably go on a sell signal. That's not a real good sign. But again, we're still on a buy signal. NASI Weekly is still on a buy signal from the last 3 weeks. Good sign here that we're holding tight. But again, this could actually flip over quickly. So we'll need to see how this indicator is reacting like Wednesday, Thursday, to see where that goes. Our NYMO, really nothing to say. We're still up in this upper end of the range. But again, this is telling me that if we're overbought, we got plenty of room to be overbought and plenty of room to be oversold. So we'll really take a look, and this is something that we're going to be watching and monitoring closely on a regular basis at the end of the day. And this is our NASDAQ record high percentage. Remember I mentioned about how we usually get a little 2-3 weeks later, we get a dip here. Hasn't happened yet, but we'll see. Let's keep an eye on this and see as well if markets are starting to kind of roll over a little bit. And take a look at our S&P 50 percentile. We're getting into these lofty areas again. And this is something that, as you can see here, we had that bottom and that bottom here. And now we're getting back up into this 86. We're at 86 now. We're going to be at 90 percentile. This is going to be a word of caution here once we get up to that area. Now, there's plenty of room, but let's just keep an eye on this as well. This is not really telling me much other than that we're starting to get into these larger areas. And again, the New York Stock Exchange new 52-week low. This is fine. I don't want to see this start to spike like we did here, and then we have this big sell-off as we starting to roll back up again. So if it's confined to the 30, 35, even 40 area, I wouldn't want to see it break back above this 40 range, which is that base. And that's something I'll be watching again. But as you can see, the indicators aren't really saying that everything's pretty much okay as long as we stay where we are and maintain this price area. But a lot of the bigger cap stocks are not saying that. So that's something that's going to be a concern, and a little bit checking under the hood, so to speak. But we'll see what happens. Quick look at the 10-minute chart of the spiders. As you can see, guys, big chop fest. Last 6-7 days, we have gone absolutely nowhere. Maybe a small short here, a short here, a short up here, but anything else, just chop. And when the S&P's chop, more than likely you're going to get price action in individual stocks that are not going to move and not going to do much. Now, as a seasoned trader, you have to understand, or a new trader, that's where the new trader might get in trouble, is by looking for other stocks on a consistent basis. And if you get stopped out 2-3 times, let it go, take a step back, and then wait for better setups and better price action in the S&P. But this, you can see, is really nothing going on here. Hopefully this will change this week. Weekly chart of the S&P cash, nice bounce off of this low. Now we're basically here 2 weeks inside weeks. Now we're going to need to break out. That 1424, as you can see, 1424, 1430 area I highlighted is going to be a pretty decent area. If we can break and hold on a closing basis, we'll probably test the high before the year end. Now, I'd love to see this pull back a little bit right into that 1375, 13 area. That'll make a higher low from this previous low from 1116, and then that'll give us a good sign that we've made a higher low and that we're starting to move up again. Like the stochastics that are turning nicely up. I'd love to see the MACDs really get a good crossover to week, but that's gonna take a little time on a weekly chart. Looking at ATR, that's fine, as long as we continue to move lower. This has a good shot of testing the highs here. As long as the ATR doesn't start to curl. If the ATR starts to curl, that means we're getting more volatility, and usually on tops, you'll see an increase in volatility. And let me move that out of the way, excuse me. Sorry about that. Um, our 60-minute chart. We have on our 60-minute chart. We have really nothing really to say here. We have our we do have our break of the bearish rising wedge, but we have not really broken down. So that S2, that 1400, will probably be a big spot for that bearish rising wedge to play out. And as you can see here, look at the Bollinger Band starting to pinch here. That means that a move is coming. We did close positively on Friday, so we'll see where this thing goes. Again, doesn't tell you direction, so just keep an eye on that. But if we do break lower on a closing basis on this 30-minute chart, we'll probably have a couple of days in that direction. Take a look at our spiders, and as you can see in our spiders daily chart, we did break higher. We're back into this rising wedge channel. Volume was a little bit better here. Again, we're overbought. And this is something that's, again, a little concerning to me. And we're back up to this trend line here, that 143, that lower band, that lower long-term trend line, which is going to act as resistance. We did break above the 50. That's a good sign. And again, guys, here, inverted head and shoulders on the 30-minute spiders, as you can see, holding true. So this is still a valid bullish setup. Same thing with the IYT, the transportation. Now, this is a big consolidation here. If you look at it, this is a very large 4 or 5 months consolidation. If it breaks out of here, this is going to be a very good technical breakout. So 92.30 is really the area that I'm watching. If that breaks out, that's going to help the overall market in general. So this is something that we'll be watching closely as the days go by. And let's take a look at diamonds. And again, as you can see, strength in the Dow Jones is really not what I want to see. I want to see strength in the Russell. I want to see strength in the transportation sector, and of course the Nasdaq, which we're not getting because Apple is obviously selling off pretty hard here. So this is something that I do not like to see in the Dow Jones, especially the Dow 30 and the IWMs. Now, if you look at this picture, now there's a lot going on the site, but a lot of this, if you look at this, you have this V, and I mentioned that we have this little. Let me see if I could actually, if I take this area here and I go like this, and we put this here like this, and then make that sort of the head. You have an inverted head and shoulders here, right? With a neckline coming in at 82.90, even call it 83. Let's call it 83, just to call it for a breakout. 82.90 actually. This is an inverted head and shoulders. Now this is a bullish pattern on a daily chart. So this will take precedent over any other chart on a lower time frame. However, I think maybe this needs to get down, break back lower, maybe fill this gap a little bit again, get down in this 81.50, come in a little bit. But nonetheless, this is a decent bullish pattern if it could break out. And if it could break out of this area, I think you're going to have the markets really start to rip to the upside. Now, again, this is a daily chart, so this does have a lot more work, but we see how we're just consolidating here the last 6-7 days. So this is going to break one way or the other, and if this is inverted head and shoulders, which is a bullish setup, my guess it should break to the upside, but we'll see. Let's let the market prove itself what direction it wants to go. XLF, really nice banking sector, took a nice move higher. Again, we're going to have this, we're going to have some resistance up in here, so we'll just need to really watch here, but this is a nice move up. Again, good for the bulls. Good for the bulls. Now, Apple. Apple here retested this line again. This is really, really concerning to me, and this is something that really needs to start changing. Otherwise, we could be in real big trouble here with Apple. Apple could take this whole broad market down. And this is probably one of the reasons why we haven't gone anywhere, because of what's happening with the technical breakdown in tech, Apple being number one, obviously, and then, of course, Eurozone uncertainty, and, of course, the fiscal cliff. So we need to really like to see this start to consolidate for 2 or 3 days and then really give a good rally push towards the end of the week. But we'll see. Let's take a look at what Apple does. Daily chart here, not looking too good. And as you can see here, if we take that low out at 505, it's not going to look too pretty, because this will break down and probably run down to this 460-ish area. And that'll be that longer-term trend line. Lastly is the Qs. Show you the Qs. As you can see, we're stuck between the 50 and the 200-day moving average. All right, guys, really watch what these, watch some of these larger stocks, especially Apple, Freeport, a lot of these safe haven sectors as the consumer staples, healthcare, utilities. They're all rising while the market is consolidating. That's not a real good sign. Things could obviously change, but just keep that at the back of your head. Let's see what happens. Let the market prove itself that it wants to go higher before going lower, okay? Have a great day, everybody. We'll talk to you tomorrow. Take care.